Good evening, everybody. It is that time of the week again. It is the Sunday market breakdown. And for any of you that are new and here for the first time, I will just go over quickly what we do here. So each week, I look at the trades that I've taken this week, why I took them, and we have a look at the week ahead. So we're going to have a look at both the economic calendar and any kind of technical levels that might present themselves this week. This week is the first week of September. So the summer months are behind us now, where most people usually consider the market to be not necessarily less volatile, but more, or actually less volume in the markets. That's at least what people say. Doesn't mean there aren't lots of opportunities though. In fact, I have actually had one of my best months this year in August. So yeah, so all the preconceived ideas that people have around, don't trade July, don't trade August, they're just utter nonsense really. And that's why I'm a big advocate for journaling your trades and developing yourself as a trader, as opposed to listening to other people, including myself, because I have my experience, I have my approach. I do believe my approach is extremely beginner friendly. And those of you that are already in the Leveled Effects community will already know my stance on this. By the way, this is school.com/leveledfx. So all the stuff that I'll be covering today and talking about is actually taught here in the Leveled Effects Masterclass, which I teach students here to learn my exact approach to the markets. So if you fancy going and checking that out, highly recommend it. I've got a good group of people over there right now. Everything is available for free. And if you do want further help, then I do offer that. There is a paid group as well. It's currently... at the time of this YouTube live, the price has now increased to $75. The founder's price is now finished. And so if you want to get involved in that, then the current price is still extremely low for the value that's in there. In fact, I will just cover that off quick because I don't feel like I talk about it enough, actually, despite what some people may think. In here, you've got daily calls with me. So actually what I'm doing here right now is kind of recapping what's happened. If you want to be a part of what I'm doing during the week, which is actually sharing what's happening on a daily basis and helping the guys in here level up and really implement what they've learned in the course to their own trading, the goal is to get people funded. And so my goal over the next 12 months is to get 100 funded traders, all through taking them through my approach to the markets. In here, I do a challenge walkthrough as well. So if you want to actually watch me pass the challenge, right from purchasing it right through to actually receiving my first payout, that's what we've got going on in here. I just want to I want to take the funded challenges off the pedestal. I think a lot of people get fearful around them, whereas trading a live account is actually much more of a scary thought, because that's real money and it's your own capital. Whereas if you take a challenge and you're actually ready to take a challenge, your max loss is whatever you paid for the challenge. But if you follow everything that I'm teaching here in Leveled Effects, I say to the guys day in and day out, there's no reason for anybody to fail the challenges if they follow what I tell them to do. Now, of course, people will do their own thing. They will get tripped up by the market. The market is a cruel animal, for want of a bit better of a word. And so, it's only really going to be yourself that stops you from being able to do this stuff. But everything in terms of like what's actually necessary to get yourself from A to B, A being either a struggling trader or somebody who has never traded before, to B, which is, receiving your first $100,000 in funded capital. That's exactly what this is for. That's why I put this together. And so, I just invite anybody to either join the paid community, you can join it right away, or dip your feet in the free community. The training is available in there as well. I don't hold anything back. The goal is to debunk a lot of the crap that I see out there in the industry that people talk about and that people teach. I'm not against other strategies. I just feel that they're not particularly beginner friendly. So anyway, enough of that. We're going to go and get right into what's actually happened this week. I'm actually going to load up the economic calendar as well. So we're going to go over to FX Street for that. Nice to see you guys. I see the comments coming in. Michal, Joel, we got UG, Ubitsa, and Josh. Awesome. Good to have you guys here. Paying attention, getting ready for the week ahead to grab the opportunities that we may or may not see, right? We're just going to be waiting for what we want to see, and I'll get into that as well. So for everyone that's new and you've never seen me and my approach before, I'll cover a little bit of that as well. For the guys that do already know my approach and how I trade, repetition is the best way to learn, right? So I'm just going to go ahead and cover the last week here. So the 25th of August to the 31st. Should have really prepared that, really, shouldn't I? But, you know, it's keeping the videos raw and real. We don't want any of that fake crap here. So, yeah, we had a really slow start to the week. We had almost nothing on the Monday. I believe it was the bank holiday Monday as well. So a very, very slow market. Tuesday, same thing continued, a very slow market. And it wasn't until Wednesday that we started seeing things pick up a bit. We had Aussie monthly consumer price index happen overnight for me. If you're in Asia or that part of the world, I'm sure it'd be within a sensible time for you, but there's nothing I could really react to on that. But there wasn't much of a move. Came in slightly above consensus, and we did see a stronger Aussie dollar off the back. Thursday, let's remind myself what happened. Yeah, we had Euro CPI, which didn't really do a lot. And then we had dollar GDP, which started to move the market, which was good. We started to see a little bit of movement. And one thing I will cover off as well is some of the movements that we've been seeing over the last few weeks have been part of a very subdued market. And one of the things that we use to measure whether price is overextended, let me just retrace, go back a couple of steps. What I'm looking for is a strong move into a strong key level, right? Whether that's support or resistance. I don't call it that because for me, how I identify the levels themselves isn't just support or resistance. There is actually a specific price that I look to get in at the market for more of a precision entry. And yeah, so I'm looking for a strong move in. And if price is overextended, it increases the chances of there being a pullback. And so when the big money moves the price into that level, profits need to be taken. And when those profits are taken, a pullback occurs. And if the move in has been strong enough, then we get a decent pullback. And that's what we're riding because it's predictable and it happens time and time again. And it has an incredibly high hit rate, which is what we want because we want more winners than we do losers. I don't believe in having a low hit rate and a high risk reward. I think doing that encourages people to stay in trades too long and essentially get smashed by the markets because they want their mechanical 1 to 3 or 1 to 5 even. Whereas some of the times, in fact, in a subdued market, a lot of the time, the market just will not give you those kind of risk rewards. And you may argue, well, the trade's not worth taking then, is it? But if you have a reasonably high hit rate, I'm talking 80, 90% plus, then I consider mostly all of those trades worth taking. But that's just my approach. Friday, we had the Tokyo CPI overnight, which was something, didn't really have much of an effect on the market. And then later in the day, we had CAD GDP. We saw some initial CAD strength off the back of that. But again, nothing crazy in the markets this week. It's been fairly subdued. So anyway, back to my point. What I was going to say there is on the charts, we use average true range, which is essentially how far price has moved over the last 20 days on average. And what you've got to be really aware of, and I'll say this for the guys in the group as well, you have to know that we're probably going to, now that September's upon us, there's probably going to be more volume in the markets, and therefore price is quite probably going to move a lot past ATR. because ATR is measuring the last 20 days. And so this is where a lot of traders get caught out because they don't realize that market conditions have changed. They're gearing up for taking intraday key levels because that's what's been working over the last month. But I have seen this enough times now to know that most likely we're going to see a change in tone in the market, and things are going to start picking up and really moving a lot faster than they were over the last month, being August. So with that being said, let's get into it. So last week I finished off the live. That was the 9th YouTube live that I've done ever. I don't consider myself a YouTuber, you guys know. I'm a trader, and I do these because they're fun, and quite a few people learn something from them. So this is the 10th one that I'm doing now. So we're in week 10 of me doing these. If you go back and you click on the live tab on my channel, you'll actually see that last week I finished off in an open position on dollar CAD, which actually ended up not working out. So it was a smaller position. So that's the only thing I can say that worked out nicely on that. But other than that, it was a trade taken, I believe it was this one up here, and yeah, price did move into a level. It was this 4-hour level just over here. It was taken, and then I ended up having to cut my losses once price broke the lows here. So yeah, just one of those things. But the rest of the week actually worked out pretty good, and I'm just going to go into those now. So euro dollar long was the first trade that I had of the week. Let's go over to euro dollar. And price has been moving incredibly slowly with this, but it still gives the opportunities and the pullbacks. So where were we? This was Wednesday, first trade taken. Yeah. Excuse me. So I've got average true range on my chart here. What happened? We had this nice move in, pretty much a straight line down. Not a huge move in terms of like what I would usually look to see. But again, market conditions play a huge part here. When the market is subdued and it's incredibly slow, we're coming out off the back of a bank holiday Monday, no data at all. Tuesday, no data at all. Wednesday, price is just kind of being moved around by the strength and the weakness of the dollar at this point. And so we had a move in to this level over here. This level was actually refined to the 4-hour. So just to cover off like why I would take a level like this. This is the move in, right? I mean, it doesn't just happen in a straight line. This is a 4-hour chart. So there are some pullbacks along the way. But when price hits here and it's off the back of a move, profits are going to be taken, and when they are, price has to pull back. And so that's really the only criteria for the entry here, that and the fact that price was overextended. If I go ahead and put average true range on the chart, for us to be overextended in a subdued market creates a very high probability of the trade working out. So my entry was off this 4-hour level, and my exit was at the first area of potential struggle. And where was that? That was basically where I had this last wick here. So I thought price could come up in here, give that wick a kiss, and then do whatever it wants. It could continue on up. I don't know at that point, right? And we're not trying to guess what the market's going to do. Nobody knows, and I don't try to. I just trade what I see. And if the market gives me only to this as being my first area of potential struggle where price is likely to slow down, that's where I take my profits. Not I want 30 pips or I want 40 pips or I want a 1 to 4 risk reward from this trade. The market doesn't care, and that's why traders get smashed, because you can't be mechanical about this thing. You have to adapt to the conditions, and you have to give the market what market structure allows for. So hopefully that makes sense. And at any point you guys have any questions, feel free to pop them in the comments. I will also say that if you do enjoy these videos and you haven't yet already, make sure to subscribe. Make sure you give this video a like. I never say that in the videos, and I should do more often. But yeah, I'm still learning this YouTube stuff. So anyway, that was euro dollar. It wasn't a big win, but again, I wasn't expecting a huge amount of drawdown here, and I didn't get it. I considered these wicks over here for the market to come and dip into those. We kind of got about halfway to them, and then price did what it needed to do and what I was expecting. So easy trade, textbook, nothing crazy there. At the same time, I had EuroCAD. Hop over to EuroCAD. So that was this. Price, move the level. Price was pretty much at the extremity, almost overextended on average true range there. The level was refined to over here, this 4-hour level, where price had moved off of in a big way before. So that makes this area more significant for me. And again, market conditions. Would I target that level on a 4-hour intraday if the market was full of liquidity and moving at a much higher pace? Probably not. I would wait for a daily or something like that. But again, market conditions is how you adapt your trading to what's going on. So same thing as euro dollar. Nothing crazy here either. Took the level. Euro dollar hit at the same time. So that was an additional confluence. Yeah, I took both. And again, the first area of potential struggle on this for me, I had to consider this wick over here. And so that's where I had my first area of potential struggle. Again, not a massive trade, 24 pips taken off EuroCAD. And that was on the Wednesday as well, exactly the same time. So just real basic stuff, guys. Like, again, I was joking with people earlier in the week that, I hop on and do these. I basically do the same video every week, but you guys seem to like them, and that's cool. But the fact that I'm showing up here every week and showing you the same stuff should by now start to sink in the fact that there's really not much to this. It's just about following a process, journaling what you're actually doing, and then reviewing your trades to see what went well, what didn't go well, and then learning from that. And as you do that over time, you will develop as a trader. That is the whole point. Anybody trying to sell you a strategy or saying that it's all about the strategy and that's the edge, absolute bollocks. Like the only thing that you need to develop is yourself. You are the edge as the trader. If the strategy was the edge, all the big banks would trade the same strategy. They wouldn't care about developing their traders. They wouldn't care about finding new talent. They would just trade an algorithm or, some of this other nonsense that people sell in the market. Whereas if you develop yourself and you show up and you do this and you do it for a long enough period of time, you'll see the same stuff just repeats over and over again. Right now, we're in a subdued market. So I'm drawing from my knowledge and my experience of what it was like trading subdued markets in prior months. And so I'm applying that now. And at some point, the conditions will change. And I expect them to change this week. Maybe not tomorrow, maybe not Tuesday, maybe not Wednesday. I don't know. But you will see when that starts to happen. We'll look at what data releases we have coming up over the next week as well. That's usually a good sign. First week of every month, every Friday is NFP, non-farm payroll. That's an extremely volatile day usually in the markets. So we may see a very quiet market leading up to that in anticipation. So you'll often see the dollar index creeping towards a level, positioning itself for what the data is going to be. The charts tell the future. The data that gets released is already old news. It's just the fact that it's being released. So that's how you need to think about it. So that was the EuroCAD trade. Simple stuff. Then New Zealand yen short on I think it was the next day. It was a morning trade. I remember that much. New Zealand yen. Yeah, here we go. So painfully obvious level. Right over here. So this was the level that we broke past, we pulled back into it, and then we shot down all the way here, which was quite a big move. It is a yen pair, so it is nice and fast. There's almost 1,000 pip move off of this level without too many pullbacks. So as we moved back into it, in all honesty, I didn't like this price action too much. It was very whippy and kind of just seems like lots of orders being collected as we moved up. And whenever that happens, there's much less of an opportunity for profit taking. However, it was still a decent enough level for me to take. And so that's what I did. So yeah, as price moved in, literally just tagged it, and then took me for 40 pips. The price did do a bit more. We actually dropped 60 pips in total. So I managed to catch 40 pips on that, which isn't bad. Again, like in a more liquid, higher volume market, I'll probably look to take more off of that. But we didn't have a massive move in. The move in was from here, if you see, like that's when price really came up. So we'd had a 100 pip move in. So for me to want 80, 90 pips off of that, it's a bit much of an ask, right? And that's what you've always got to ask yourself. When price moves in, has it created enough of an opportunity for you to utilize the pullback? If price has only moved into the level 40 pips, and that was the strong move in that you're looking for, then what are the chances of you grabbing 40 pips back off that? Very, very low, unless it's a reversal point. But you don't know that. So at that point, you'd be gambling and you've been trying to guess that, I think price is going to turn around from here. Great if it does. That's why I usually take partial trades and then leave a runner. This week, however, due to market conditions, I've just been cashing the full profits at the first area of potential struggle because I haven't seen anything that looks particularly juicy. They've all been kind of quick trades. So that was a New Zealand yen trade. Again, simple stuff, move in, move out, and then price continued on up. So good decision making there. Yuji says I got more than him. Yep, well, that's something you're working on, Yuji. We've got to hold those trades a little bit longer. First area of potential struggle on that we'll just cover off as well, just to be clear on that. So what I ended up doing with that is just identifying these candle body closes on the 1 hour chart, and I decided that if price breached that, that would be a pretty good area for me to, or pretty safe area anyway, for me to exit the trade. You know, nobody ever went broke taking profits. So Yuji, if you were in this New Zealand yen trade and you took something off it, then fair enough. You can always get more, but that's why you journal your trades and then you see how far they go. And so one of the things that you have to do when you look back over this particular trade is, one of the questions you'll ask yourself when you go back over is, what were the market conditions like, right? And there'll be tons of trades that you take on New Zealand yen in the future where market conditions will be much more volatile, and you won't be taking 30 or 40 pips. You'll be holding for much longer because the opportunity will be there. If you had a 200 pip move into a level, the pullback on that isn't going to be 30 pips, right? You can target 80 pips on that. So that's just the main difference. And it is the number one thing that I think catches people out. Imagine you're trading a strategy and it's been going great because market conditions have suited that particular strategy. Let's say it suits a volatile market, and all of a sudden the market turns very subdued and you're not getting any of your entries and it just stops working. Well, the strategy hasn't stopped working. It's just the market conditions have changed and you've not had that awareness as a trader. And so that's why I get people to watch what the market's doing. I get them not only to look at the technicals, but also understand how does the market feel right now? Like, where is the dollar positioned? Where are stocks positioned? What are some of the safe havens looking like? Is gold up? Is it down? Is silver in correlation with it? It's things like that, just to gain an idea of what's going on. And even looking at things like government bonds, to understand what the market's feeling like. And if it's in all of these consolidation areas where we have been for a long time on some pairs, then, you've just got to take whatever the market gives you and not hold trades for too long, because then it comes back on you. Your trading idea was good. It worked. It was just a bad management from your side, which is harsh because, you did everything else right, but the market does not care. So that was New Zealand yen. Dollar yen as well. Dollar yen, there's a good lesson on this one as well. Dollar yen, I think a lot of people would have missed this for the sole reason that, let's see, which one was this? Was it over here? It was 145. Let's drop to the 15. It was here. 1 hour. So yeah, this was a 4 hour level where price had come up quite nicely and then had this really nice drop away. Price was still kind of like creeping back up. It did look like price wanted to move higher, but on which day was it? Wednesday as well. We did make a move into that, back up into this level here. And so refined to the 4 hour, I had an order placed initially just up here. And one of the things that you've got to spot, especially on pairs like the yen pairs, and some others, but you'll just see it from your journaling. When there's a big round number, more often than not, price will just react off the big round number and not go all the way to the level. And so in this case, if I always try and go like a couple of pips just ahead of the level price, for the reason of not wanting to miss the trade due to spread from the broker. But in this case, a couple of pips wouldn't really do it because the level was 145.06. I think initially I had like 145.04, but that would have missed me by the spread. So for this one, I actually entered on the round number 145, and then took my first area of potential struggle. Profits on this, 40 pips or so. It was 38, 40 pips, something like that. But yeah, that was the dollar yen trade. So price wasn't overextended, but again, like moving from the bottom here up to the top, it's still a 130 pip move. So these quicker trades can occur, and if you've seen it time and time again, then you can absolutely take it. It meets all the rules still. Price isn't necessarily overextended, but is it going to be in a subdued market? Well, most likely not. So it's really up to you. Like, you just have to build this confidence over time, and the way that you do it is journaling your trades and then seeing what happens and then writing down what happens. And it sounds like really basic stuff and it's very obvious, but I don't see enough people talking about that. And that's really all you need to do as a trader is like follow your rules, journal what happened. If you're getting smashed by the markets and you're following rules and a process, well, then you can look at what if you made an alteration to one of your rules, and then you can go back over all your trades and look at them and go, now let's look at them as if I would have altered my rule on that. Does that add to my edge or take from my edge? But you can't just look at one trade, right? You've got to look back at all of them. But if you have them and you've got screenshots and you can go over them, this is gold. This is the stuff that people don't prepare for, because the barrier to entry on trading is so low. You can stick $100 in a trading account. You can use leverage. And, you know, the classic is people want to double, triple, quadruple 10x their accounts because they're trading with like such small capital that you can do that. But I don't advocate that. I think it creates bad habits within traders. You know, it's not uncommon for me to talk with a fairly new trader that's not yet profitable that is upset if they only get 9% on a trade. And it's just insane, right? Because 9% on a single trade is not impossible, but that's a good target to have. But that's just not how I trade. I trade low risk, small gains, lots of them, high hit rate, and that does wonders for my psychology. And it will do for yours as well. And that is what you need to protect the most when you're a new trader, so that you don't get burned and smashed by the market, because it's just a very stressful place to operate if you are if your psychology is not, if you're not on top of your psychology, basically. If you're just allowing the market to whip you around and destroy you, you're going to be fearful when you need to be confident, and you're going to be confident when you need to be fearful. Unfortunately, the market even rewards you sometimes if you do something wrong, just because of the way it moves. You know, you can do a bad trade and still come out profitable from it. That doesn't help you though in the long run. And as humans, we only look really short term. And with trading, you really need to shift your thinking. And the only way to do that is to journal what you've done, because you may think you've done nothing really this week. You know, you don't like to remember the trades that you took that didn't work. And so if you don't write them down, they almost never happened in your mind, right? But if they never happened, you never learnt from them. And if you never learned from them, you made no progress. And that's why people can go for years trading the markets, losing money, and doing the same thing. It's madness, but that's what people do. So anyway, dollar yen. Yeah, that was a nice trade. Euro dollar and Euro CAD. So these ones I had on Wednesday. I had exactly the same trades again, I think on the Thursday, if I remember correctly. Euro dollar, let's get back to it. Euro dollar. Was this the next day? Yeah, this was the next day. So the exact same thing happened. And again, would I trade exactly like this if we were in a more volatile market? Probably not. I would wait for much stronger levels to get hit. But again, market conditions, I'm trading the intraday key levels because otherwise I probably wouldn't get any trades. And that's not the end of the world. I definitely don't advocate going looking for trades. But again, if you journal what happens when the market is subdued, you will find that all the levels work off the intraday levels. And so if you know that, why not capitalize on it? So that's why a lot of the trades I've shared with you this month have been that way. I'm sure it's going to change this month because it always does. But yeah, let's have a look at this one. Strong move in, strongish, like strong for recent conditions. So we have the move in, boom, 57 pips or so. So you can't expect too much from that. And then again, these wicks over here needed to be considered for my my profit target on this. And this, I believe, was a 4-hour level as well. Pretty much all my trades this week have been 4-hour levels just here. So again, just because the move in, it looked like we needed a pullback at this point. And again, it's a decent level where we did have a nice move off it. And that was the reason for entering. Were we near average true range? Not exactly, but it was still, it was a level that had to be considered, and that was the reason for entering. And so, yeah, took profits on that. I forget what that was. Only 20 pips, yeah. And at the same time, once again, we had the Euro CAD trade. So that was this one here, also long. Exact same thing happened. This one was slightly better. This missed by a couple of pips initially. If I go down to the 1 hour, it might be a bit more visible. Yeah, so in the morning, when Euro dollar hit, Euro dollar tagged me in. Euro CAD missed me by a pip, which happens, it does happen. And then later that day, we had, let's just see what it was. I think it was dollar GDP from memory. Dollar GDP, yeah. So 3:30, we had the dollar GDP. And the euro dollar level held. So that was all throughout this. We had a pin down. We touched ATR and then pinned back up and stayed pretty much above that level. And then Euro CAD at the same time actually pinned down, tagged in the trade, and then went on to do its thing. This one for me, I actually left it overnight. So I did have a slightly higher profit target on this. I was targeting this wick up here. But as price moved along, this is the 1 hour chart now. So price tagged me in around 5 o'clock. We did move towards my original profit target throughout the day. Then we moved away. And then in the morning, when I got back on the charts around 7 a.m., I saw that it had missed my profit target. And so all I did was I just adjusted my profit target to the highs that we'd hit before. So if we went back up to retest them before dropping again, it would tag me out. And that's exactly what it did. Not immediately, but within the next couple of hours, yeah, by 9 o'clock, I was tagged out of EuroCAD. So same thing. And on that note, like I don't want to be holding trades forever. I don't mind staying in trades for longer, but usually I want to see that move off the level fairly quickly because it's a pullback. So yeah, comments coming in here. Just reply to some of these. Mihal says, how is your account where you take all the levels? That's this one here. Yeah, it's going well. It's so for those of you that don't know and not in the group, I have an experiment going right now where every single level that I put in my tracker, I'm not being discretionary about it at all. I'm literally just taking the level. It's kind of an experiment for the guys in the group to show the hit rate of taking every single level and not factoring in everything else that's happening in the market. So yeah, I think there's one trade that hasn't worked. It was on Euro New Zealand earlier in this week. I think it was Wednesday night from memory. I can have a quick look at it now if you want. Euro New Zealand, where is it? EN. But these aren't trades that I'm taking on my main trade copier account. So that was this one here. The reason for it, 4 hour level just here. Price on the day, it would have just tagged average true range. However, this happened overnight. And this is one of my rules that I don't usually leave pending orders overnight. And that's exactly what happened on that one. So yeah, price came in, had a look at it. Or I don't think it did any pullback at all from the level. A small interaction, but we're talking about minuscule amount of pips off the level or the entry. Yeah, it did like 11 pips and then carried on down to the next level. So when that happens, again, you don't need to take every single level, and I don't, because you factor in quite a lot of other things, like how far has price moved into the level. I also consider price action into the level, like the way Euro New Zealand came down here was kind of a fade. I don't like when price is kind of going up and down, up and down, up and down. It's collecting orders, which tells me it's most likely going to smash through the level. What I'm looking for is a sharp move into the level, and you see we got that with the drop here once we passed that level there. So once we dropped 120 pips into that level, and that actually delivered a decent amount. I didn't take that trade. I missed it. So it just goes in as a worked level for me, but I didn't take it on any of my funded accounts. For some reason, I just missed it. I was awake at the time, so therefore it's a missed trade, and that's how I journal it. And you guys should do that as well, because you don't only learn from the trades you take. You remember them a lot more, but you also learn from trades that didn't work, and you learn just as much from trades that you missed. So they still need to go in. So I had the level marked up. Maybe I forgot to set an alert. I honestly don't know what happened with that. But again, I don't care, and neither should you. Like, could I have done better? Absolutely, and I always strive to. But if I miss a trade, that doesn't mean I'm now going to go back to the market and try and find one, right? So when I miss a trade, I genuinely don't care. If I take a loss on a trade, I don't care. If I take a win on a trade, I also don't care. It's a hard thing to understand if you haven't been trading for a long time, or long enough to kind of feel that you need to have that mindset where it's just, another execution of a trade, and it's not good it's not good or bad, it's just is, right? And that's how you need to look at it. And if you're losing a lot of trades, that's an opportunity to learn and grow. And if you're winning a lot of trades, well, great, but I'm still going to look at those win trades and look if there's areas for improvement. Like, am I taking my profits too early? Am I taking too much of a partial trade when we're in conditions that favor targeting a further profit target with my remaining trade? So there's always things you can learn, and I have absolutely no issue sharing the ins and outs of that with all of you guys here that are tuning in each week and watching what I'm doing, because this is actually trading. The only traders who don't take losses are like the social media traders, right? And I'm just never going to be one of those. So, and it's just not normal to show people that you never you never lose or whatever. So like, yeah, dealing with this stuff is important to know how. So I'm happy to share all of that. So yeah, but in answer to your question, Michal, it's going all right. That's the only losing trade that I've got on taking every level so far. UG, that's what I could have done on New Zealand yen. Yep, exactly. Well, one of the things that you want to be more aware of is just refining your areas of potential struggle where you're going to take your profit, and then having the confidence in them to leave price to just get there without you watching it. That's the worst thing you can do. If you're in a trade, just go and do something else. You've already done your thinking. You've defined where you're getting in. You've defined where you're getting out. And then there's nothing more for you to do. You sitting there watching the trade will not make the market go where you want it to go. And it will just drain you of energy. So do not do that. That was the euro dollar and euro CAD. Euro yen was a bit of a weird one. I'll show you this. So again, this is where people can get caught out, myself included. But I will keep trying the intraday key levels until they don't work, right? Again, market conditions will change. I am expecting that. I do not know when they will change. What I do know is that market conditions on this particular day, things were very slow still. And so it's a yen pair. So the move in to this level was 100 pips, which is decent for me. Can I get a 30% pullback on that? Probably. Has the level worked already? It has. And therefore, I've seen in my journal, in my data, this work time and time again. Was price overextended? Not even close. But has price even come anywhere near to being overextended in the last week or two? No. So I'm not going to wait for that if I know that the intraday key levels will still work. And that's all I'm doing here. So I don't want anybody to get the wrong idea and think that you just take every single candle body close that looks like a move on the chart. This is a yen pair. The move in was strong enough, and that's why I took the move. Was it high probability? Medium, I would say. But again, I'm going to keep trying the intraday key levels until they don't work. Market conditions will change. And when they don't work, I won't second guess myself. And this is the difference, right? I won't go, oh, my strategy doesn't work. I'm not going to lose sleep over a trade that didn't work out. Instead, what I'll do is I'll assess the market. Have conditions changed? Because I know that's the reason why that trade potentially didn't work. I've already done the thinking around it. I'll go back over it to see if I missed something, but probably not. So anyway, price moved in, messed about for a bit, and then got its pullback. So that was the euro yen trade. Simple stuff. Again, candle body close. I believe it was a 4-hour level. It shows on the 1 hour as well. But yeah, these type of consolidation areas where we've got price just digging in around it. I'll show you. Oh, what am I doing? I'll show you this on gold as well, because like gold's been really easy to trade the last week or so. I haven't been involved in it because I just don't like where it's sitting. But we can all look back in hindsight and go, wow, that looks like a really good trading opportunity after it's done. But it wasn't for me. But I'll hop over there now and show you. So gold has just been stuck in this consolidation area, right? And so these are the candle body closes on the 4-hour chart. You could have sold here, you could have bought there, you could have sold here, you could have bought there. Look, so these are the levels. 4-hour level, price came in, boom, off the level, and then you're cracking on for 230 pips, right? And because it's gold, it moves a lot, but it just wasn't for me based on where it is, because I'm bullish gold. That's my bias. I think it will continue to go up. Doesn't mean it's not going to come down before it does. That's not how we trade. But in general, I'm looking for longs on gold, which is why you can see I've been waiting on this level to come and get tapped into, which I didn't have all week. This level here just seemed to hold for some reason. I think it's because it's the 2,500 level. that's pretty much it. So price is not wanting to get below that at the moment, but at some point my theory was that it would come down to try and grab some liquidity before going higher, and when it does, I'll use the level as the reason for getting in. So yeah, that's that's how you could have traded gold. I chose not to. That's not for me. But yeah, sometimes things look really nice after the fact. Hindsight and all that. Euro Swiss, this was the same time as Euro Yen, pretty much. There was correlation with Pound Swiss on this trade as well, which I was waiting on, but I didn't take. And we didn't get the setup actually. So exactly the same thing. I'll just show you Euro Swiss as well. So that's the Pound Swiss setup, and this is the Euro Swiss setup. So kind of a similar structure. We're on the 4-hour chart. 4-hour candle body close. Price was pretty much coming up to average true range, which it doesn't always get to, as you can see here. We also had this Euro Swiss trade. Can't remember if I took that now. I don't remember being in it. So I think that was also a missed trade for me. But that was the 29th, midnight. That's why I was asleep. So yeah, this was no move in on a Swiss pair is a strong move in. I can't call it that, but it was a move into a level, and it was an intraday level, and these levels have been working on the Swiss pairs. We had alignment with Pound Swiss also moving into this 4-hour level. Same kind of structure here. We've got the kind of like the V shape, move away, move back in, and yeah, that was pretty much the reason for taking that one. Euro Swiss, yeah, so not a huge amount, but again, the drawdown on this, like if you consider the wicks, like that's really the only risk I'm looking at this. I'm wrong when we get above this, and when I'm wrong, it's going to be about 12 pips, you know, if I'm including some spread and a bit of breathing space. So an easy trade off of that, and yeah, it still delivered, I think 18, yeah. So 18 pips on a Swiss pair for an intraday trade is pretty good in my books. So yeah, that was the Euro Swiss trade. So that's all the trades that I had this week. Pity about the dollar CAD long, but again, that one caught me at the end of last week. Caught a few other people out as well, from what I understand. But these things happen. And like I said, it's not a good thing. It's not a bad thing. If you followed your rules and you took the same approach that you always do, you weren't fearful of getting in, and you just approached it the same way as you usually would, and it didn't work, fine. Learn something from it. Like, it's in the journal. You will pick something up from that. And if you don't, like, not all trades are going to work, you know? If you look back over the videos, it's an extremely high hit rate. And so when you take a loss, it's not good, it's not bad, it just is, right? And you have to just move forward from it. In the beginning, when you don't have the confidence, this is the problem. This is what will slip you up, is you will second guess yourself, and you will tie yourself in knots wondering, did I do something wrong? And you're right to ask yourself that, but again, go back to the journal, check, like, is there something you missed? And if not, then just move on, you know, just carry on doing what you usually do. So, yeah, that's all the trades this week. I'm just going to have a flick through and see what's coming up this week in terms of data, and then try and see if there might be something painfully obvious on any of the currency pairs. The dollar index right now finished up on the high. So we had a strong dollar closing out on Friday. Stocks were also closed back up at the highs. US 500 still hasn't tapped into that 4-hour level above. The US 30 did, and has gone a bit beyond that. But what I was waiting on this week, where my theory was that stocks would push up, hit the level, and then sell off. And as they sold off, that's where I thought the dollar strength would come from. Looking at this chart, I was looking at us dropping a little bit lower, as in stocks moving a little bit higher, and then we'd see our pullback on the dollar, and then that would create some opportunities on the currency pairs. But we haven't got down there. Price has missed it, moved away again. We haven't really broken out of this channel down yet. So there's definitely still room for us to open up with a weaker dollar tonight, or at least the first part of the week. Remember, NFP on Friday, so the dollar is going to be getting itself positioned for that. And if we look at where the dollar index is right now on the weekly, it really is 50-50. Like, we're not placed at the highs where, it looks like we're going to pull back. We're not at the lows where we look like we're going to recover. We could really go either way from here. So very cautious trading. I'm not looking to jump into anything immediately. Tomorrow, I'm actually going to be off the charts most of the day. So definitely not going to be rushing into anything that looks half decent. I'm going to be waiting for the strongest setups and let the market play out. It's the first week of the month. So, same thing to you guys. I would suggest holding back and not starting your week with anything overly enthusiastic, put it that way. So anyway, back to the economic calendar, and we'll have a quick look at what is ahead for the first week of September. Can you believe it is the first week of September already? This year is flying. The years get faster each year. We've got some Asian manufacturing PMI on the Chinese yen. That'll be when I'm asleep. So nothing to really report on that. I'm sure it won't do too much for the market. If it does, we'll just journal what happened and see what's been affected. But my plan for tomorrow, looking at this, is going to be hop on the charts in the morning, see what happened during the Asian session, adjust any of my levels if they need adjusting from what I did yesterday morning, set my alerts and wait. That is the excitement of a trader's day. Most of the time, it's just waiting. Last week there was no trades on Monday, no trades on Tuesday. Got my first trade on Wednesday, and then the rest of the week ended up being quite busy. Tuesday, we've got Swiss CPI. That could be interesting. So be aware of that. If you're getting into anything Swissy on Monday, just be aware that you want to be in and out, or at least be in something that looks very strong. Then we've got ISM manufacturing PMI on Tuesday as well. Bit of dollar news. So that could be nice. Move the dollar a bit before NFP. My thinking on that, though, is that we're not going to see a lot of movement first part of the week. We've got Aussie GDP. That will definitely move the Aussie dollar. So be aware of that Wednesday morning. So if you're getting into anything pound Aussie, Aussie dollar, Aussie New Zealand, Aussie yen, just be aware that that's coming during the night if you're in a European or UK time zone. What else? Yeah, Aussie GDP, that should do something, get us moving, hopefully. Bank of Canada interest rate decision. Let's have a quick look at where we're currently positioned on the CAD pairs. Euro CAD, that's been done to death this last week. Bank of Canada interest rate decision. I think either rates, what are we expecting? Does anybody know? 4.25. And last time was, lost my place now. Where is it? Wednesday, Tuesday? It's Wednesday. Yeah, it was Wednesday. 4.5% previous, 4.25 expected. So a recovering economy, apparently. And so the bank are looking to cut interest rates. At least that's the consensus. So if they don't, and we keep it the same at 4.5, should see some Canadian dollar strength off the back of that. However, if they do, if price comes in lower, then or the interest rate is cut to below 4.25, then I think we should see some more CAD weakness in the market. And looking at the chart, I would say, let's get to the daily. So that's Euro CAD, Pound CAD. Yeah, I would say we want some more Aussie CAD. New Zealand CAD. New Zealand CAD's kind of at the highs. Dollar CAD. Trying to recover a bit. Yeah. I don't know. We've got that horrible price action just there. And we're kind of in the midst of it right now. So, yeah. Just see where price gets to before Wednesday at about 2:45 London time. But that should be interesting. Maybe we'll get some CAD pairs lining up for that. But right now, I've got nothing to really, know about that. We just have to see how price moves in the first part of the week. If it gets positioned, if it continues, if it manages to break these highs on dollar CAD and comes up here, and or gets positioned closer to this, it may be that we get a spike up into the level and then we get a sell-off with CAD strength, which could suggest that the market's expecting rates to cut, but the Bank of Canada maybe surprise us and keep rates the same, which would be, I guess, positive for the Canadian dollar. Investors don't like interest rates being cut. So that's up until Thursday, and we've got ISM services, PMI, ADP employment change, so a bit more dollar news as well on the Thursday. Trade balance, Aussie dollar. So we've got a fair bit of Aussie dollar news this week coming. Friday, of course, we've got NFP. Friday looks pretty heavy. CAD's going to be a good one this week. We've got net change in unemployment rate as well the day after. So whatever happens off the back of that interest rate decision, also be very aware that 24 hours later, we're also walking straight into unemployment rate and net change in employment. Also wages, slightly less impactful news, but it's all coming at the same time. So it'll be a Canadian dollar sandwich of movement there. And then, NFP at the same time. So the market will go berserk. Best advice for you is to have your levels marked up. Make sure the levels that you're selecting for NFP are a good distance away. Remember, the market is much more volatile during non-farm payroll. So don't be entering, don't be placing pending orders 20, 30 pips away. More than likely they will be smashed. It's just unnecessary. If you're unsure about anything, just journal it and don't take the trade, and you'll learn for next time. So that's kind of my advice for everyone every single time. When you don't know, you don't know. When I don't know and I'm unsure of a setup, I just won't take it. And if it ends up working, then it's in my journal as a trade that worked that I didn't take. And then I got to work out why I didn't take it. And if I see that happen enough times, then I can flag it as a problem. And you can do the same, right? But that's how you develop as a trader. It's not about the strategy. It's really about you and your edge. So that's what we're going to be doing over in Leveled Effects. In the free group, you get access to the course. And in the paid group, we're going to be journaling this week once again. Guys in here are starting to really shape up nicely. And I really don't think it's going to be too long before we're seeing the first funded challenges get passed in here. It's I'll say it again. It's impossible to fail your challenge if you follow the process. And I don't say that lightly. It's a big promise, but it comes with the caveat if you follow the process. And so it's only you that's going to mess that up. So best thing you can do is have a routine where you're able to plan your trades ahead of time. Make sure the trades that you're taking are in your trade tracker, as in you've planned them ahead of time. And so when you come to actually execute on them, you don't need to think. You just execute because you've already done the thinking, right? And if the trade works, fantastic. If it doesn't, it's one for the journal. Don't worry about it. You're building the data over time. So anyway, on that note, if anybody doesn't have any more questions, I will look to wrap up the call as we are at the 1 hour mark. I've done my job of rambling on as usual, but hopefully there are some takeaways in that for you guys. These videos are, well, these streams, should I say, it's the same thing every week, but that's the point, you know. There is no change, and you shouldn't be changing your approach to trading just because you've had a bad week, or you shouldn't be getting overly excited just because you've had a good week. Everything resets tomorrow, and you know, you're only as good as your last trade. So on that note, I will wrap things up, but thank you again, everybody, for tuning in. I really appreciate it. It's good to have you on here, and I know that by you showing up and really taking an interest in this stuff and learning from what I'm saying, you will do and execute what I say, and if you do that, you will actually reap the rewards. So keep it going, and yeah, if you're not already subscribed, do that, like the video, appreciate it, and until next week, my friends, have a good rest of the Sunday. Bye-bye.